Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope you guys all had an amazing trading day yesterday as we are lining up Hump Day. It's a wonderful day in the neighborhood. We are going to do what we do each and every day, looking at the same 10 to 12 futures markets from an educational perspective. If you're new to the channel, click the subscribe button and smash that notification bell. Let's go ahead and dive in. So the S&P this morning, we are up about 2 points, basically flat this morning at the open. So yesterday I talked about the potential for a breakout above this area. We didn't get any quality basing in front of the level, to make it really a worthwhile play, as we had, your pivot was way down here. Remembering that when we want basing, we want it close to where the other basing occurred near the breakout zone. Didn't get super quality basing out of there. However, that's what caused this little pop, and then we dropped through there later on. So, right now, I think that there's just not a whole lot going on worth trading. There's not a lot of phenomenal levels in here on the hourly chart. If I dive into the 15-minute level, I can, look a little bit deeper. Possibly we get a little reversal off of this level here on the 15-minute. If you're so inclined, you get this little 15-minute zone here. But if we have really any basing at all into that level, then that would negate that. So in a sideways price action, it's very difficult to find quality levels, and that's kind of what we have here. So, I still think our next closest level is this little 15-minute zone down here, or the 60-minute level up above. And that's why it's important to make sure that we're, keep an eye, those of you that are members of TradersArmy.com, keep an eye on the website so that you see the updates. As we talked about yesterday in the update, trading above the breakout point wasn't really any basing at or before. Not an ideal setup. Don't be slow to move the stop and lock in profit, because we did get a little run up. And that's why it's important to make sure that you're monitoring those updates as they come out. The NASDAQ, very similar picture. We didn't have that really strong basing in front. I mean, you might even be tempted to take a break down to the downside today, but I think that we could get wiggled out one way or the other. And I think discretion is the better part of valor is one of the things I would say about today. So in both instances, that's where I would be looking. Now, crude oil. So in crude oil, we came close to the level. Remember, this was the level that we got a really nice bounce off of on Sunday. So for those of you that were able to take that one, and then the second time into the zone, we had a little bit of basing before, and so we popped through the level. Right, we popped right through the level, and popping through the level means that we remove that quality of the zone. So I need to take that level off at this point. Now, the little bit of basing that we had here could still be an okay reversal point. But once again, if I look at this on a 4-hour, you will see that we're still in between some major zones and levels. Nothing here really to lean on as far as a reversal point. Now, when I go to a 15-minute chart, I actually like this area down here a bit better than this one above here. But I like this area way down here better than both. This little tiny zone is very small risk, but remember it's on a 15-minute chart, so we got to put it in purple. Other than that, there's really not a whole lot in here that I'm a huge fan of. Looking over to the left as far as quality supply, you've got a little zone here that we may see a bit of a reversal off of today, so keep an eye on this level. But remember, if we get any basing in front of the level, then it's not going to be worthwhile. The thing to remember about basing is I hate basing in front of a reversal zone, and I love basing in front of a breakout zone. And so, because they're exactly opposite styles of trades, right? Well, I say they're opposite styles of trade. They're the same trade. Basing in front of a reversal zone means that it's probably going to keep busting through. Basing in front of a breakout zone means it's probably going to bust through the right way. And so, here, if I get any basing really, into this level, it's going to kind of make that a little bit tougher to lean on. Crude oil, Gold. In gold, we had looked at this level yesterday. I would need basing once again. This is the breakout zone I talked about yesterday. We're going to need basing somewhere in this range in order for me to take this breakdown. But this is the breakdown that I'm looking at as of today. Technically, you could probably even look at another breakout above here. If you wanted to try a breakout above that area, we're getting a little bit of basing here that's fairly close to that. If I get even one or two red candles in here to give me some more basing, then you could use the breakout to the upside to your advantage. Looking over to bonds and currencies, we actually had some pretty strong overnight movements in some of our currency markets. Our bond markets were looking at this gap up here on our bonds after the overnight positioning. Still looking at the demand area down here. Certainly no supply areas that I'm gonna lean on, as our yields are back to a new low. So I would let that thing be. Wait for a reversal to come back down. In the Aussie, on the 1 hour chart, we had a couple of decent, the little entry reversal off of here. Prices are still overall falling, but I don't really have a good level in order to get back in. I think that we are basing, we hit this level and have really done nothing from hitting this level, this little hammer candle reversal. So we hit that hammer candle and we were unable to really get anywhere out of that level. Let's draw that line a bit better. There you go. Unable to get anywhere out of that level. So let's see where it goes from here, as it just gave us a little pop and go. This is actually now setting up for a candle-to-candle reversal style. And so you can possibly get short with right now your stop being above this high. The euro, we had a breakdown yesterday. Euro broke down, gave us a nice little move out of that euro level, and then it's now popped back up into the break-even zone. So if you're still in this euro, I think you should move it to break even and even take a little bit of profits off the table. I was speaking to one of our subscribers, a very good friend of mine, last night, and he said that he had ridden it down. And my advice was, don't allow the overnight hours to take it away. And so it came back just a little bit. If we do get a rally back up, I still like this supply level up above here. Canadian dollar, this blew right through our potential area of demand. Felt like that was a pretty decent reversal point, and we just came, absolutely right through it. So a small loss there relative to the reward potential. But now, looking at this, my next area wouldn't come into play until up here. And overall, on the 4 hour, we are still very sideways. And so anytime you're very sideways, you've got lower probability. If you're big picture sideways, you're lower probability. All right. And finally, last but not least, Great British Pound and the Japanese Yen. We saw a big overnight movement in the pound as this one came down, hammering down through our demand area, but reversed on the secondary demand level. So, hit that first one and got really, a small stop out loss. And then the second one, we've rallied up pretty strongly off of that second one. So if you got stopped out on the first one, the second one is working very, very well. At this point, I need to remove them both from my trade ideas and opportunities. But we have the speed candle retracement to consider. So if price does indeed come back up into here, let's look at this as a speed candle retracement and see if price gets us a reversal. The Japanese yen, we bounced up off of this demand level and then have rallied up. If you caught this long and you're still in it, I think you should take your stop, move it up to underneath here to lock in a fair amount of profits. And then it is actually setting up for another leg higher. And if you do set up for that next leg higher, I would be very cautious of this area right here as a reversal point. So that's all I have for today. If you have any questions, please shoot us an email, support@tradersarmy.com. Until tomorrow, everybody, I will talk to you soon. Later.